Well, welcome to today's 11th webinar in our Realising Paperless Trade series of webinars. Today, I'm joined by Holly Miller, who is the Head of Fraud Solutions for the Asia Pacific region with Quantexa. And Holly leads the development and delivery of fraud solutions for Quantexa in this region across the banking, insurance, corporates and government sectors. She's a chartered accountant and a certified fraud examiner, and she has over 18 years' experience working with some of the world's largest organisations and some of the most critical and complex fraud and corruption cases. Her experience includes requests from the UK Serious Fraud Office and the US government's Department of Justice on behalf of global life sciences, consumer and natural resources organisations in relation to investigations into corrupt conduct. Further, over a 10-year period, Holly travelled extensively across the Americas, the Middle East, Asia and Europe, and she was investigating corruption and leading remediation projects to introduce third-party risk monitoring and data analytics programs to increase the integrity of organisation supply chains. Some of Holly's clients at Quantexa include the global and regional banks, government agencies and regional insurers. And we're very pleased to have her here today to give us some insights around contextual decision-making and how that might be useful as we contemplate a modernised trade system in Australia. So without further ado, Holly, please, if you have any words of introduction, please let us know. And then if you'd like to move into your presentation, and then we'll have our usual Q&A session. And for participants, please use the Q&A button at the bottom of your screen. So, Holly, over to you.
Thanks so much, Brian. Thanks for the welcome and intro, and thanks for having me. So it's great to see everybody today. I guess in terms of what I've planned for the session, I know we've got an hour. Hopefully, I'll kind of finish in about 30 minutes, maybe just over, and then leave plenty of time for questions. I'm really interested to know what they might be and some of the challenges and how you might see the application of our technology being relevant. But the plan for the session is to talk about actually who is Quantexa, what does the organisation do, why contextual decision intelligence for trade. I will let you know what that is and what that means, and really dig into some case studies of how governments that we're working with, how financial institutions that are working in the trade finance space, and how corporates more broadly across their supply chain are using Quantexa. So whether that's to identify risks, streamline processes, and indeed actually identify opportunities in some cases as well. And then I'll finish off by bringing it to life and showing you a demo and showing you what that actually kind of looks like in practice. So that's the plan. So starting with who is Quantexa? So Quantexa has been around since 2016. So I think that makes us kind of 7, almost 8 years old now, and actually very much started in the financial crime space. So started mainly with financial institutions. So our 6 co-founders, I think combined, have around kind of 100 years experience in the space of financial crime, data analytics and entities and networks, which is quite specific, but I'll dig into that in a moment and what that means. And they saw many of their customers, many organizations that they were working with really struggling to make full use of the data they have access to. And there's loads and loads of stats and things around, you know, the increasing volume of data. And many of that is super relevant and really, you know, really relevant to some of the complex decisions and challenges that organizations are facing, but the real struggle to kind of make use of that. So that was really the kind of the reason behind that. They'd seen why many of those analytical projects had failed, and they really wanted to counter some of those challenges. In terms of who we are, so we're around, I think this is a bit out of date now, we're around 700 people globally, including around 100 people in Asia Pacific, many of them in Australia, and our teams in Sydney and Melbourne and Canberra. And actually a big chunk of the people that we have working for us sit within product, sit within R&D. So innovation being a real focus of what we do across Quantexa. Essentially, there's a bit of buzzword bingo, I think, but in terms of what we do, so contextual decision intelligence. So what does that mean? Pretty much what it says on the tin. So getting much more context to make more intelligent or better decisions. So whether that's a risk decision, an opportunity decision, it's whether we should inspect this shipment that's arrived, whether that's we should investigate this transaction because it looks like it could be fraud, all around getting more context to make those much better and more intelligent decisions. I've got on this slide, a couple of our clients, so some of the biggest banks in the world, some of the biggest government agencies in the world as well. So across the US, multiple governments in Europe. We have a state agency in Australia that's using Quantexa for fraud detection, and also across Asia as well. Digging a little bit deeper into the challenge we see, and I'll make this more kind of specific for trade in a moment, but really around having that ability to make use of that data. So some of the stats that are available, so 90% of data that's deemed relevant is actually not being used to make decisions. And also the importance of automation. So, many analytics adopters, although they're, adopting analytics and technology and not actually being able to use that to make decisions and automate those decisions, still very much relying on people for that purpose, which is obviously important. But how can we, make those easier decisions to really focus people's priorities on those complex, challenging problems and automate some of the more simple ones? In terms of trade, and I'm going to be kind of covering Quantexa from 3 different angles and 3 different perspectives, if I can, on this webinar. And I've pulled out a few quotes here from various different agencies and not-for-profits, etc. So obviously, and I'm sure the people listening to this webinar, I don't need to tell them some of the information on here, but to talk about actually from a government perspective, $2 trillion being lost annually to the economy due to illicit trade, smuggling, counterfeiting, etc. And obviously the impact that then has on global development goals. In the corporate world, so actually where I spent quite a lot of my experience prior to joining Quantexa, there's a huge responsibility there, whether that's the pharmaceutical companies, whether that's the actual global transportation system itself, to monitor and detect this risk. And some of that is, advantageous, if it's in the space of counterfeiting, like why wouldn't you try and stop that? But in others, obviously it's regulated and it's a social responsibility to do so. And finally, in the financial services sector, so we work a lot in this space, in the trade finance space, and that does represent quite a small percentage of global trade. But actually it's been recognized by organizations such as the FATF, which is the quote that I've got on here, that due to the nature of those trade finance relationships and some of the typologies you see in the ways that things like trade-based money laundering occur, sophisticated, complex crimes, and actually very vulnerable to money laundering in this space, and is an area where very significant values of money can be laundered in single transactions. So we're actually approaching it from all different angles from that perspective, and working with organizations across that ecosystem. What do we do? So what does the technology do? Let's get to that. It's all around getting more context and getting that contextual real world view of behavior. So what's actually happening? The ways in which we do that, and this really is, explaining that kind of contextual decision intelligence approach, but in that trade context. So number one, we get much more data. So what is the relevant data, which is often sitting in disparate systems within an organization? It might be sitting outside an organization, so it could be external, publicly available or commercially available data. It might be data sitting in, customer data, supplier data, if you're in the kind of private sector world, information around consignments, telemetry reports, etc. So much, and I'm sure this is, just the tip of the iceberg, but so much rich data that's available. Problem is, it wasn't necessarily designed to be joined together and used together. Sitting in disparate systems, really difficult to get that view. So in terms of how Quantexa approaches this, the first thing is something that we've called data fusion. So a set of accelerators, artificial intelligence that's really able to take that data and ingest it and understand it and unify it really quickly. So there's lots of stats around there around kind of why lots of these projects fail. And often it's just because that piece of getting that data and loading it into a system and turning it into a different language can take so much time and effort that it's failed before you even start. So we've got various different accelerators. We don't have a set schema. Quantexa essentially takes the data in the form it is and is able to recognize that's an address, that's a counterparty, that's a customer, that's a home address versus a business address, etc. And also various different kind of data packs and accelerators for known data sources, things like corporate registries and watch lists, etc. So that's the first piece. Got all the useful data. We've got it in the platform and we've unified it. The next piece is something we call entity resolution. So absolutely foundational to everything we do at Quantexa, and a lot of my colleagues call it kind of our secret sauce. But it's essentially how can we get a single view of the entities within that data? So how can we identify across all this vast data that we've collected and ingested a view of Bryan Clark? And Bryan might sit on multiple different, I'm not saying this is the case, Bryan, but might sit on multiple different external watch lists. He might have an offshore company that's listed on the Panama Papers. He might be a consignor and consignee, two different sides of a trade. He might, he might have a related party or an address that's sitting on a different document. But how do we get a single view of that individual? And it's not, it's not easy. It's challenging. And this is where actually a lot of our investment and our technology is focused around getting a really accurate review of those entities that can be relied upon. So the way in we do that, I'm not going to go into, deeply into the tech that sits behind it, because I could spend, well, I couldn't, but some of my colleagues could spend days talking about it. But there's lots of really interesting tech, understanding that, a Bryan Clark in Sydney postcode 2000 is likely to be one of many. Well, a Bryan Clark in, a rural postcode somewhere out in further New South Wales, he might be the only one. So really building on some quite sophisticated tech there to get that view. Importantly, an entity isn't just a person. So an entity being any real world thing. So there's some examples here, an individual, a business, an address. Again, not easy to get a single view of an address, a bank account, an email, etc. So once you've got that really rich data, you've got a really clear view within the entities around it, then you can build networks around it and really understand the behavior sitting behind it. So for example, Holly and Bryan have a trading relationship together. Holly and Bryan both get paid by the same employer. Holly and Bryan might share a phone number or an address. So understanding all those different connections within the data and understanding the relevant connections as well is really important. That's something we see a lot in the banking world. Just because Holly and Bryan both pay Netflix every month, not interesting. So do millions of other people. The fact that Holly and Bryan potentially get paid by the same employer, for example, or the only people that pay this third party, that becomes interesting, and it's likely that there is some kind of relationship there. So being able to build that kind of relevant view is also super important. So we've got our data, we've joined it together, we've built real world networks around it. Then our customers are able to actually put analytics across the top. So actually understand the risk and put detection and prevention and actually understand what's going there. So identify real world behavior within that complete data set. And what we've seen actually is often just having that context as a starting point. So putting that effort into building that kind of data foundation means that even a really simple score across that can be really valuable. So now we've got a really clear view of who Bryan is. Is he connected to a watch list? And that's really kind of uplifting what our clients, what our customers are able to do in this space. Just to bring that to life a little bit more in the trade context and what that actually looks like. So this is an example, and And this example that's relevant actually to a customs agency, but just as relevant to a bank that's looking at trade finance fraud, TBML, etc. So what could that look like? So without entity resolution, what are these organizations facing? What are the kind of some of the data challenges they're seeing? So they might see 5 individual shipments and 5 parties and counterparties that look to be a little bit different. Do we know they're the same? I'm not sure. The names are similar, but not quite the same. How can we be confident that's the same party? So by using entity resolution, we can get a single view, in this case, of the businesses sitting outside of that. It could be an individual, an individual person as well, where the entity resolution is a lot more challenging. But we have a single view of the interactions between Bright Star Electronics, in this case, and Clear Sky Instruments. Going further than that, what you're able to do, and what we usually do in these kind of projects, is actually aggregate that data. So to enable us to do analytics over the top, to enable us to see some of the connections, we aggregate those relationships. So we can see actually there are 5 trades between these 2 parties over a certain time period totaling this value. So we've really kind of tidied up and streamlined that view, which is important from a efficiency perspective, obviously, but also from a risk perspective. Having that single view means you're able to identify more risk around those parties. Once we have that unified view, we can then build context around it. So we have our trading relationship between Bright Star and Clear Sky. And we're then able to understand, okay, what else do we know around these parties? And by bringing in things like corporate registry, which is really valuable for this use case, especially global corporate registry as well. So understanding, businesses and corporate structures all around the world, we're able to identify things like who are the individuals sitting behind these companies, who are the shareholders, who's the UBO, who's the ultimate beneficial owner, who are the directors, what are the addresses, and what connections can we see there? So in this case, we can see behind Bright Star Electronics, we've got an individual, Robert Mitchell, as a listed director, a shareholder being another business, and with Clear Sky Instruments, James Richardson. What we can also see in this case is actually there's a circular relationship there. So they are actually both connected by Bright Star Group. That circular relationship is absolutely key, and those related parties and those U-turn transactions we sometimes see is absolutely key to what we do in the financial crime space, actually, because there's very few genuine reasons why you would finance a trade when you're sitting on both sides of the trade. So that's often a big red flag in that space. But obviously in the illicit trade space, and when you're looking at customs and what you want to look at, the fact that there's control on both sides of these transactions is also very interesting and a risk that's worth considering. We can take it further, obviously, and there's always the challenge when you're looking at network analytics is how far do you go? I'm sure if anyone's heard of the 6 degrees of Kevin Bacon. You can look online and see, you can connect any movie star to Kevin Bacon within 6 hops. So there is an optimal view from a detection perspective. But in this case, going a step further and understanding whether it's adverse media or whether it's case notes. I think in this case, it's a case note which identifies these 2 entities, individual entities that we have on the network, Robert Mitchell and James Richardson, are actually potentially operating as the same person, operating under distinct identities and have been linked to drug trafficking. So being able to pick up some of that context. I'll touch on this briefly in the demo if I get time, but our approach for looking at things like adverse media is quite different. So we're not just looking at, doing a fuzzy match of Bryan Clark against this adverse media article. We're looking at Bryan Clark and the network around him and looking at him against that adverse media article. So the fact that Bryan Clark is named in an article, very likely that's going to be a false positive. But the fact that Bryan Clark has been named in an article with reference of trade, an ACITI and Sydney, etc., means that the chance that that's the same Bryan Clark increases significantly. We're doing time 20 past. So in terms of how our customers and how organizations across lots of different sectors are using Quantexa right now, there's lots of similarities, but also some quite different use cases. I'm going to touch on a few of these briefly now before I get into the demo. In terms of the similarities, so this kind of goes through the approach, and this is kind of a holistic view of trade at Quantexa and what that could look like. The first kind of left-hand area at the top, so trade finance, lender data, supply chain data, is very much that kind of private sector corporate view of the data that they have internally that's useful, that they would pump into Quantexa to get that context. So I think I've touched on some of these before, but from a supplier perspective, contracts, purchase orders, invoices, tender documentation, from a trade financier perspective, customer KYC, transactions, payments, etc. So all really relevant, useful internal data sources that they're bringing into Quantexa. Obviously then getting into the government context, so being able to build in information around kind of consignment reports, inspection reports, internal watch lists and intelligence, being able to bring that into the platform and get that view. We've got a number of government agencies. One of them I can talk to, actually, the Public Sector Fraud Authority in the UK, that's bringing lots and lots of different government data together, actually, that has never before been together into Quantexa, to get that intelligence across multiple different agencies. The final one is external data. So again, I've briefly touched on this, but we've seen a lot of this is relevant across multiple different users and use cases. So corporate registry, global corporate registry for this use case, obviously very valuable. Watch lists and known bads, and increasingly, especially in the supply chain space, which is where I've got quite a bit of background as well, we're seeing that kind of broaden in terms of the risks that they're looking at. So the importance of things like modern slavery, environmental factors, and data sets around that being brought in to get that kind of complete view of risk. All that data's in there. So what do? We build entities and networks around it. We score against it, and we detect risk and prevent in some cases as well, depending on how our solution's been implemented. Things like counterfeit, smuggling, drug smuggling, which I'll touch on in the demo actually, fraud, money laundering, modern slavery. We're looking at a whole range of different risks, but really it's often using the same data and the same approach, but really kind of using that real world view to identify some of these challenges. I'm going to go through a couple of quick case studies and then I'll jump into the demo. Bryan, I may take up a bit more than half an hour on the presentation, if that's okay. In terms of the first case study, and it's actually quite simple. It's actually just the entity resolution component. So there's a large tax and customs entity in Europe where we did a piece of work with them. And it was just that foundational piece around actually getting a single view of the traders sitting within their system that they were monitoring, that they were risk assessing. So they actually had 850,000 trader IDs or trader profiles within their system. And Quantexa was able to, just by using that entity resolution component, was able to get that down to 51,000 unique operators. So obviously a significant impact, not just on process and efficiencies, which is huge. You've gone down from having to risk assess 850,000 to 51,000, but also from a risk detection perspective as well. Like the fact that, Holly Miller might have, 20 different trader profiles. The fact that one of them is connected to, a known issue or a known bad or whatever, or smuggling or whatever it might be, means we've identified risk around all of those profiles. It also raises the question why, and we see this actually across a lot of the banks that we work with in Australia. So many of their customers have multiple customer IDs, and in some cases there's a genuine reason for that. It's an accident, it's a mistake. One was set up 20 years ago, one's very recent, but in some cases that's actually being used deliberately, manipulating identities in order to commit fraud, money laundering, etc. So it's something that that ability to do that entity resolution is really powerful from that perspective as well. The second case study, and this will take a couple of minutes. So this is a little project, a little exercise I did with one of our potential customers that we're working with in the natural resources space. So essentially, they gave me a bit of a problem statement. We're thinking of using this supplier. What would Quantexa tell us that our traditional approach wouldn't tell us? So it's a really nice comparison of what the two different approaches look like. So the supplier itself was a company which owned a vessel, which owned a ship. And in terms of what the traditional approach told them, it's based in Hong Kong, incorporated in 2009. It's got 2 directors. The UBO, so the ultimate beneficial owner, is in a high-risk jurisdiction in Liberia, actually in Africa. Can't tell you anything else because there's low transparency. That was it. How do you make a decision on that? Like, what does that tell you? How can you take a risk decision on whether you should be using that supplier or not? This looks huge and quite scary, but this is the context we're able to get with Quantexa. So not saying that someone actually would need to go through and build this out. This is exactly something which could be automatically detected, but much more context. And you'll see lots of red flags lit up like a Christmas tree and lots of risk as well. Just to go through a few of kind of the highlights that we found. So you could see that the UBO of this holding company for this vessel was based in Liberia, but interestingly, that was new. So it had been transferred out of a Chinese state-owned group only a few months previously. So being able to actually see previous owners, previous directors, etc. What you could also see is a number of other vessels and their holding companies were transferred out of that group at the same time, and that actually happened twice in 2022. So 2 groups of companies being transferred out of the Chinese state-owned group to be owned by a low transparency nation in Africa. Interestingly, looking at the connections and looking at the entities and the individuals involved, it was still very closely connected and essentially, I would say, controlled by this Chinese state-owned group. So from a corruption risk perspective, being closely connected to PEP, state-owned entity, increasing the risk from that profile. Actually following that through, like looking at the connections going through the UBOs, you can see at the top lit up like a Christmas tree. So loads and loads of connections to watch lists, adverse media, ICIJ documents, etc. So really interesting, and I've kind of touched on some of this already, but from the transparency perspective, state-owned, high-risk jurisdictions, and links to things like sanctions, political exposure, trading suspensions, antitrust, bribery and corruption, all information that was available when you were able to kind of build those entities and understand the network around it. Final one I'll touch on just very quickly before I go into the demo. So as I mentioned previously, we work with some of the world's biggest banks, and many of those world's biggest banks are using us for trade finance, financial crime in that area. So whether that's trade-based money laundering, TBML, or fraud. And we first started doing that in kind of August 2019, actually off the back of a lot of the significant kind of fraud events happening in Asia Pacific. So things like Hin Long, etc. So massive losses actually incurred by the banks at that stage. And then increasingly the regulators focus on things like TBML. So it's a hot topic for Austrac, for example, in Australia. So a lot of the global banks and increasingly some of the local banks deploying Quantexa for trade-based money laundering. And some of the reasons for that, so it's a complex, sophisticated type criminal activity. In many cases, looking at things like the counterparty, looking at things like related parties, looking at things like U-turn transactions, etc., is just really challenging without having that kind of entity and network view. We've built models on things like shell companies. So how can you identify that this is likely a shell company? So really powerful in the financial crime space for this use case. Is this real? And I imagine something, we haven't implemented that for customers yet, as I'm aware, but I imagine something that would be very interesting from that perspective too. I'm going to pause for breath for a tiny second and just swap my screen over for the demo. Give me one moment. I work for a technology company, but I'm not that great at technology. It always takes me ages to move things around. shouldn't admit that. Okay. Bryan, all good? Can you see the new screen?
Yes, can do.
Good, good. So what I'm going to go through is an example.
Just lost your screen then, Holly.
My screen, sorry. Let's try again. Hopefully all good.
Yes, although there are less files indicated.
Okay, I think we're good. Oh, what is going on? I keep on getting these messages from Zoom. But I'll keep going. I think it's fine. So what I'm going to go through is a demo of how Quantexa can be used in the customs environment. So how bringing together information around individuals, businesses, can detect some of those kind of complex, sophisticated schemes. But very much the case study I'll go through is absolutely what we're doing in the banks. You know, talking previously around that kind of connection to organized crime, is a very similar approach, similar data sources, and similar typologies that we're looking at as well. So what you'll see here is we've received some alerts. So this isn't really a task page for an investigator to review the alerts that have received. And you can see here that we have one alert named high risk company structure, which has generated an overall score of 900, which is a high score in this context. It could be red, green, amber. It could be out of 10. It depends how our customers have implemented our solution. But what we're able to do is, and I'll just click into one I've got here. We're able to go into that alert and use that to kind of identify the risk and investigate. So you can see here, and I'll drill into this in a bit more detail. There's a series of scores that have generated that aggregated score of 900. There's a pre-generated network which demonstrates the scores and the risk around that consignment in particular. And on the right-hand side, we have what we call a context pane, which provides the details sitting behind many of the kind of documents you see that have been used to build this network and identify this risk. Before I kind of dig into the scores and the story of what you're seeing in this network, I guess just to go through some of the kind of basic concepts. I'll hide those scores for a second. So the way we build our networks is very much around documents and entities. The way I would describe them is a document being kind of anything you'd have on a piece of paper. So a trade document, a bill of lading, in this case, a corporate registry document, being really the data sitting behind it, while the entities, as I've touched on, being those real world things. In this case, we've got individuals, addresses, and we've also got businesses representing those entities, those real world things. In terms of how this score has triggered, so you can see here that there's 18 consignments in this aggregated trade document here between a business named, I'm just going to test my Portuguese, Viveiras Medida Limitada, and the Sofa Loft. So there's an aggregated trade document sitting behind it. And Quantexa has alerted on that 18th trade. So the 17 previous trades didn't raise an alert, but there's now additional context around this trading relationships. We said this is now high risk and this requires investigation, inspection, whatever it might be. And this is the specific trade here on the 9th of June 2022, which has raised that alert, and the scores have been triggered on. If I move to the scores that have triggered, and I'll go through some of these in a bit more detail, you can see that there's a number of scores who generated a score of 900 overall. Quantexa has a series of kind of out-of-the-box models and scores that we've seen to be valuable across all these different use cases. And we can also work closely with our customers on, how those would be defined. But essentially, they're at 3 different levels. So you would get a score on a document itself. So, for example, a score specific, in this case, to a telemetry report. you would get a score on an entity. So in this case, scores here around individuals on that network. So based on everything we know associated with Bryan Clark, we've generated this score on Bryan, and you can also get network scores. So they're really understanding the behavior around that network, which is generated in alert. So they can come at 3 different levels. In terms of going through some of these in detail, and I might start with those telemetry reports. So there's 2 scores been triggered here around on this specific document around abnormal routing and an unexpected event. In terms of understanding that, rather than kind of looking at a list of dates and timestamps, we can actually switch to a map view. And we can see actually, you know, what is that kind of abnormal routing, what doesn't make sense. So we can see here, follow the shipment, which went a very, very long way around Curitiba before it eventually left Brazil. So obviously, again, telling something that you guys are all experts in, but, you know, seeing that kind of deliberate, you know, complex and long transit routes, crossing borders of multiple countries, etc., seeing those sorts of risks, really valuable in identifying, you know, potential, you know, provenance of illegal products or how traffickers may act. I think it's important to mention that you often see risk signals like this on a single document, but by itself may not be enough to say this is an illicit trade and it needs to be stopped at the border or whatever it might be. It's around understanding that full context of behavior to really get those highest risk consignments, transactions, trades right to the top of the list. So I'm going to switch back to the network view. And I'll touch on some of the scores that have triggered around corporate structure change, which you're seeing actually on both of the main kind of parties, the consignor and consignee, the Sofaloft and Moveas Medida, and also a circular ownership that's been detected. So you can see that actually these 2 companies are connected to each other. The best way to kind of show that is actually to show that on a timeline. Let's see if that is cooperating, because I wasn't having fun with that this morning. And we can look at a series of times. So we can see that actually a lot of this change in context happened in quite kind of the recent past. So if I look at the time period and go back, so we can see if we go back to, open this one up, go back to earlier in 2022, we have the 2 counterparties of the trade. So Moveas Medida and the Sofaloft. If we look at the corporate registry document, one incorporated in 2011, another incorporated in 2012, and we have the original directors of those businesses, so Manuel Santos, Ella Casey, and Alex Hughes. And we can have, you know, the transactions that occurred prior to that new trade in June 22. But if we hop forward, we can see some additional activity. So we can see Valor Capital, who's now the UBO, being incorporated in April 2022. If we continue hopping through the network, we can see then actually these kind of intermediary companies were set up and ownership was transferred to them. So we can see that happened here with Accord Segurando in May 20 and Cord Holdings in June 2022. So we've seen that kind of change in activity, the change in ownership of those businesses. The risk profile has changed. Importantly, now we can see there's a circular ownership. So there's control sitting on both sides of the trade, which increases the risk. And we're also seeing a link to known bad. So in this case, if we look at Valor Capital, that we can see there's 2 directors, one of which is an individual named Ana Macedo. And we can see that in 2008, she was arrested and charged with attempting to smuggle cocaine into the Netherlands. And we can also see on Andre Braga, there's a little binoculars, can't find the word, binocular symbol against his name, which indicates there's been a potential hit against adverse media. And so if we look at this, we can see that Andre Braga linked to drug smuggling and actually is an associate of Ana Macedo. So really being able to kind of understand what's changed in that behavior, understand the activity, and build that real world view. I'll just skip to the end. A couple of other scores, and I won't go into detail. So you've got the first time this individual, Tobias Black, has been named, and again, there's some adverse media potentially linked to him, and a circular ownership. So what it's enabled you to do is really get that view of activity, build that context, identify the key entities and their links to known bad. As I mentioned, this is in the customs context, exactly the same sorts of typologies and risks that we're actually looking for when we look at things like trade finance fraud and trade-based money laundering, etc. And also in terms of the way very briefly, in terms of the way our customers are kind of operationalizing this. So obviously from a detection perspective, a lot of the AML type work is reporting stuff that's already happened. So it's very much a detection perspective, but we have organizations that are using as real time to prevent and detect, including in the areas of things like borders, trade fraud and others. I will stop there, Brian. I've realized I've spent far more than half an hour talking.
Thank you very much, Holly. That's been really fascinating and quite exciting to see the capabilities of your system through that example as you've just done. So just a reminder to our audience members, if you'd like to use the Q&A chat function, if you have any questions there. But I'm just wondering, you've given us a lot to deal with there. And I guess without thinking of the crime, if we thought of the good actors, is this also a methodology where people can build a trust profile, if you like, that they are not part of those things, and therefore, somehow offered, improved facilitation outcomes through the processes that go on. And so, and then you can build a cohort or a profile that says this behaviour is an acceptable set of behaviour. If you're within these parameters, that's good, and that then may lead on to some other sort of behavioural economic incentive system. Is that what happens with these systems?
Exactly right. And across lots of different use cases as well, we're seeing the same thing. So actually, can you make it easier for the good people? Can we do straight through processing? An interesting one is actually drawing a parallel. We do a lot in the insurance fraud claim space. And how can we really focus the time of those insurance teams on those high risk customers, high risk policies, high risk claims, and make it much easier for the people that really need money really quickly because something's happened, to get their money and put that through, a straight through processing exercise. So exactly that. If you can be more confident that you're finding the bad stuff and you're finding these complex, sophisticated behaviors, it means you're also more confident that you know who the good people are. Yeah, you're exactly right, Brian.
Thanks for that. I'm also interested where you ended up, those relationships and new directors or a new entity was at what sort of time frame does this occur at? Is it instantaneous, or are they months apart, or so when does your system update?
Yeah, so it all depends on the data and how often that's refreshed. We're not Quantexa isn't a data provider. We've got a number of different data partners that we work with, etc. But it's essentially our customers' data that's sitting in the system. So often what we see, I guess, on a typical deployment, but it does, it's the classic, it depends, right? But on a typical deployment, especially in a bank, it may be that customer records and transactions are updated daily. It may be watch list comes in once a week. It may be the corporate registry documents are updated once a week, or whatever it might be, and you then get that view. In some of our real-time use cases, so we're working with a government's border agency, for example, and we're having information coming in where we needed fresh, new information coming in where it's looking at the context of the entities and networks sitting in Quantexa where they need a decision within 5 minutes. We've got use cases in the banking world, the financial services world, where someone's applying for a credit card or a home loan or whatever it might be, where you need a decision back in 5 seconds. So you've got new data being pumped in, and you need that insight back quickly. So it does vary depending on kind of the use case and the risk.
I'm imagining things like adverse media. Media cycle is super fast, or can be. your system responds to those things. If you know Holly or Bryan or who you're looking for, the system's already, it watches all the time, or it has to be asked to do something?
It depends how organizations have set it up, but yeah, we can pull with APIs. We've identified that Bryan has just been named on this, and that can be automatically detected. So that's a big change, especially in that kind of the supply chain integrity space. So what I've seen previously in previous life working with some of the biggest global farmers and biggest global natural resources companies, it's generally a look back exercise. They might refresh some of their high risk suppliers once every 6 months or once every 2 years and see what's happened. But then they're going through all of them and trying to understand, versus much more of a kind of a trigger based outcome. So Quantexa is telling you something has changed. You thought this supplier was fine, but we can now see that it's a state-owned entity, or that we can now see it's listed on a watch list, or it's got a new director who's connected through to one of our employees and there's a fraud risk there. So yeah, being able to be much more reactive. Same in the banking space. So looking at things like, rather than doing a refresh of customer profiles, being able to perpetually monitor and identify risk when it comes through. So yeah, definitely a focus of ours.
And what about retrospectivity? As you said, maybe something only comes through every 3 months or a year, as periodically. Can you then ask it to run retrospectively? Well, we've now got a new piece of information, but we want to actually look back in time about that.
Yeah, absolutely. And for some of our use cases, that's exactly how they do it, especially in the kind of AML financial crime space, where it's more of a detect then report versus a prevent, sadly. That's exactly how they do it, and it'll be a look back. And often even the first time someone implements Quantexa, right, the first thing they want to find is all the skeletons in the closet. So it's much more of a big remediation exercise, and they go, and they have to deal with that. So yeah, there's different ways, depending on the kind of individual problems that our customers are facing, I guess. And often there's regulators involved, and there might be a remediation exercise that's required first, etc. So it depends, but yeah, exactly, all those different things can occur.
Ian Watt's just given us a case study of his own there, and that he likes the idea of verifying before the fact, not after. But he's wondering if this is a viable direction, especially thinking about SME traders and gaining trade finance.
Exactly. And it's actually I spent quite a bit of, I've had to do the same thing, the unscrambling, and to identify those related parties. When you've got a bit of intelligence and something's happened and you're doing an investigation, a lot of what we do at Quantexa is around turning that on its head. So rather than everything that you would previously have done at as an investigation, drawing out some of those networks, try to identify those hidden links, going through ASIC searches and trying to understand who those businesses have connected to, taking that to the detection element and identifying those links and detecting on those links and identifying that risk much earlier. So important, especially in the trade world, where related parties, when you're in the kind of trade finance space, those U-turn transactions, there's just no real genuine business purpose for that, other than, are they doing something dodgy? Like, why would you be financing a trade from Bryan to Bryan? So really kind of picking up on that risk is, it's one of the reasons why trade financial crime solution has been so successful, because you really need to understand those kind of sophisticated, complex, network-based typologies.
And how often or frequently does the system throw out false positives, as opposed to, so indicate somebody that had a problem, but there was never actually a problem against further investigation? And do you then modify the algorithms or whatever is spitting out the results?
Yeah, so a lot less. So usually when we replace the legacy system, the false positives reduce significantly. So the extra context, yes, finds some of those sophisticated, collusive, organized type scenarios, but also it discounts some of those single one-dimensional risks which you'd previously been alerting on. So it's really able to do both at the same time. And often what we're seeing, so I've got a customer at the moment, I won't go into specifics on the use case that it might give them away, but they've replaced a legacy system, which was very much a rules-based engine, lots and lots of rules and a machine learning model on top. And they've replaced that with Quantexa. And actually they've replaced it with only around 15, 20 scenarios that are really kind of indicative of real world behavior that actually means something. And the result of that is they're getting a lot less alerts. But when they see those alerts, they can see actually that it's reflective of, complex, collusive, illicit activity with many connected actors, organized crime, etc. So they're really getting those high value alerts that that require focus versus a lot of previously, sadly, a lot of kind of one-dimensional false positives, difficult to understand type alerts that were coming through.
And Holly, how scalable is this? You're obviously dealing with banks who are dealing with millions, I guess, of transactions at a pretty high frequency, but things like customs, it's all of the banks added together. How scalable is your system, and does it cope with really big data issues?
It does. I think a good example is HSBC. So one of our first customers, and using us globally, all its global transactions are going into Quantexa every day. I'm going to get the number wrong. I should have this on top of my head. It's something we're able to quote, but over 50 billion 50 billion transactions going through Quantexa. So it's massive. We haven't yet met a scale problem. Obviously, there's infrastructure elements that need to kind of sit around that, but yeah, it's something that we're able to deal with well. And because of the problems that we're tackling, when you're looking at kind of a retail bank with the huge volumes of transactions that are going through them, it's something that we're able to pick up.
Well, you showed in your demonstration that mapping exercise, which seemed to indicate that must have been an Internet of Things type device that was tracking where that vehicle had gone and where it stopped, etc. It's GPS recording, etc. For that. So the data, once you start to accumulate across supply chain,
big, exactly. It's a big set of data. And we see that across one other kind of big data file that we find very useful in the financial crime space is things like global corporate registry. Millions and millions of businesses, but not just that, the information around that is really, really rich, which I think isn't always kind of considered. But you don't just have these are directors and the shareholders, you have these are the industries, you have the financials around them, you have really rich data around that business. So yeah, it's big data, and we've been able to handle all that. But yeah, it's very valuable getting that extra context. And it means that we're able to find things like, thinking of corporate registry, we're able to find things like Phoenix operations. We're able to find things like likely Shell and Shell companies, which has been really valuable for lots of government use cases. Actually, is this a real company, or has it been created just for the purposes of financial crime or illicit activity, etc.?
And so just for clarity, does your system, you say you implement for clients, but it's the client's database. So the client's database remains resident in the client, and your system is operating, some sort of surrogate way across the top of that. It's not, you're not generating a new set of information.
No, the data doesn't come to Quantexa. The Quantexa sits wherever our client's data sits. So whether that's on-prem in their cloud or wherever it might be, which is really important. So we've got some quite sensitive, obviously banks and customer data they're very sensitive about, but the same with government, even more so some of our projects we've got with UK Gov, and that's just not an option anymore. So yeah, it very much sits on the customer side. Sorry, the light is shining at me. I'm trying to see.
In reverse, small businesses. How do you service small businesses? What's the smallest business you could service?
So at this stage, and there are some exceptions, because Quantexa's software, it's a proper piece of software, piece of technology. It sits on the client side. It's usually larger government agencies, larger banks, larger corporates. However, we do have cases where we have some of our partners running more of a managed service, which makes it more attainable or more practical for clients that might not have a huge IT department or necessarily the experience to deal with that. I feel like I've turned into like half a person. If it's any better. No, worse. What's happening with the lights?
Very shady.
Yeah, I don't know. I just got this sun just shining right at me through the window, and I'm like, oh, there we go. It's gone behind a cloud. So yeah, that's kind of the challenge right now. But I guess we've got state agencies, we've got kind of regional banks in Malaysia, Singapore. So it's not just the HSBC and Standard Charters of the world, if that makes sense. But at the moment, it's generally the larger businesses and entities that are implementing Quantexa.
And Holly, you mentioned, will you create a trader profile, and you've mentioned these global corporate registries. How valuable is that initial establishment that Bryan Clark is actually a real person? In order to open a bank account, I have to have already provided 100 points of identification, for example, which I don't necessarily have to do in other contexts. So how do you link, something like that where Bryan has already undertaken a level of what was effectively government attestation using my passport and government issued documents? How are you joining that together? And is there an opportunity, or do you, create a profile that says, well, that Bryan Clark that we know there is the same as that Bryan Clark that we know there, and we can join those things together so we don't need to look at him?
I think understanding your question, so it's really an interesting question in terms of and we see this a lot in the fraud world, especially at the moment with things like scams and mule accounts, etc. So who are these different identities? And the strength of that identity may vary. Applying for, obtaining a business at somewhere like Companies House in the UK is notoriously easy. I think it's maybe a little bit harder in Australia, but not that much harder, versus obtaining a bank account. You're exactly right. And being able to identify the strengths between those different entities. What we're seeing a lot in the fraud world is the use of stolen identities, synthetic identities, which are a bit of a hybrid between a real person and an imagined person. Some people go to extreme lengths to build these synthetic identities for various different reasons. But being able to do, what is happening with the light? Being able to do that entity resolution and identify potential manipulation of those identities, which could be deliberate, across those multiple documents. We've identified this as the same person, but we think that they're deliberately trying to manipulate their ID is a really powerful risk factor as well.
And I guess the list of people who are on watch lists or good or bad lists, etc., is there'll be a narrow set of people and businesses that are in there, and they're the ones, the needles in the haystack, as some refer to it, as that are trying to be identified. But if you've got a system like this, they'll be more easily identifiable, will they not?
Yes, and sometimes it's really difficult. So, for example, to identify that Bryan Clark is on an offshore leaks document is really challenging because the ICIJ data is really skinny. There's not much identifiable information on there. But if you were to actually combine, Bryan's customer record at this Australian bank with the ICIJ and also use a corporate registry or some additional data, you can actually link across different components to identify this is all the same person. So by using that approach and building more context and using more data, you can pick up the date of birth here, the first line of the address here, the name here, the date of birth, to really get that kind of really accurate, clear view of this is the same person. So, for example, Quantexa has made the ICIJ data actually usable. When that first was leaked, I can't remember when that was, it was when I was still working in the UK, 2012 or something like that. It was like, great, everyone needs to screen all their customers, everyone needs to screen all their suppliers. Just not possible because it was too skinny. But actually this technology has enabled organizations to make use of that. I think to add to that as well, and I've just seen we've hit time, but add to that as well, you're not just looking for those direct hits as well, we're looking for those indirect hits. So is Bryan 2 hops away from a watch list document? That's also interesting. So being able to pick that up as well too.
It sounds very powerful. We've got a last minute question. I was going to ask you a different one, which I may still do, just running slightly over time, but it was a follow-up to your earlier answer around SMEs. And the question that we've got is, in developing countries, for example, where there are many SMEs probably trying to do the right thing, exactly, but the governments then have some infrastructure or a telecommunications group or another business support group, for example, could they offer a service like you are doing in a collective way that a lot of small businesses in developing countries might be able to then better establish their credentials of trade through this type of thing, if I've got this right?
I think I understand the question, and happy to pick that up in offline if not. But yeah, and actually there's lots of kind of public-private partnership discussions and existing relationships we have where we're kind of supporting that. So not this specific challenge, I don't think, but yeah, it does make sense. Like, actually, can we help build a profile where currently they don't? And I imagine often, oh, we can't trade with them, we've never heard of them before, and how we don't know what risk is associated with them. All we can see, they're in a high risk jurisdiction, so not happening. You know, can something like Quantexa bring much more context around their activity? You know, the directors potentially sitting behind it, which may be also a director of a very well-established business, for example, which might give you more comfort. Yeah, exactly. That's the sort of thing that the technology could do, if I've understood your question correctly.
Yeah, well, Ian's indicated we've got it right, but we know from earlier presentations there is a huge amount of unfunded organisations, and the lack of, because banks can't support them through their regular know your customer approaches, then they don't get finance and then they don't trade, and it's a serious barrier.
Mm-hmm. That's interesting.
My last question, I know we need to wrap up, but is, you mentioned modern slavery, and you know, this is something of strong interest in Australia, of course, and you know, how does your system track that in opaque supply chains where the slavery might have been in the cleaning organization of a business rather than, you know, directly in the business? How do you deal with that?
So there's different ways to approach it, and it obviously depends on the data that you're bringing into the system. And the more transparency and the more detail you have around the multiple different levels of your supply chain, the more you know, insight that you can have and the more context you can have around making decisions. So it can be more predictive stuff. So for example, the fact that Bryan Limited is trading with a manufacturer of widgets in this province of China means he likely has, you know, for this value means he's likely having, you know, 0.2 slaves in his organization. So that's one way of approaching it. So identifying more from a risk profiling perspective. The other piece is around by having like real deep transparency around the different levels of your supply chain. So who are your direct suppliers, indirect suppliers, you know, level 2, level 3, level 4, and whether you're getting that from your own internal systems or whether you're bringing in global trade data to increase the transparency of that, actually connecting to the real known bads. So, you know, whether it's this factory in X country has been convicted for, you know, human rights abusers or whatever it might be, you know, you can identify those links. I guess more broadly in terms of where Quantexa plays in this space, it's less in supply chain, but actually looking at the financing and the money laundering. So seeing it more as a predicate offence to money laundering that we're seeing in the banks. So a lot of the kind of typologies and the behaviour that we're looking at in financial institutions is to identify the complex behaviour, you know, certain countries, you know, values of transactions, etc., which might indicate that. Some really interesting case studies we've got out of the UK where we're actually trying to identify mule accounts in a bank. And as part of identifying mule accounts, we were looking for behavior like, you know, many accounts being set up by using Eastern European profiles in a short period of time at the same bank, seeing their debit cards being used at the same ATM machine, one after the other, looking for mule accounts, but actually what we found was modern slavery. So groups of individuals being brought in by organised crime. So lots of different ways that we approach that problem as well, depending on which sector we're looking at it.
Look, Holly, you've taken us through an awful lot of information very quickly. We've run out of time. We're a little bit over time, in fact. But look, thank you very much for your time and insights today. It's been really wonderful. I'm sure others can follow up with you if they're interested in it. Next week, we have our final webinar for the year, which will be Bill Cole, who is known to many in Australia at least, but he's been undertaking some PhD level research on our regulatory systems and particularly the Customs Act. And so pretty keen to have a conversation with him, and that will close out our year. But to you, Holly, thank you very much. To our audience, thank you very much. We will see you next week for those interested in our last webinar for the year. Thank you very much.
Thanks so much, Bryan. Bye.
Bye.